How exactly do tax brackets work? If you make more than $628,000, is all of your income taxed at 37%? Or how does this really work? How do these things work? My name is Merrill Taylor with Tax Tutor. If you like this video, please hit the like and subscribe buttons below. So let's talk about tax brackets a little bit. Now these are the 2021 tax brackets, but this theory applies no matter what year we're in or whatever the brackets work out to be. Currently, we've got bills in Congress that are looking at raising the 37% to 39.5%. So to be honest, the principles that we'll talk about today don't really focus on the numbers and the percentages, but really talk about the concepts of how brackets work. So the way that brackets work is that when you make money, the first, and I should also point out, these are married filing jointly tax brackets. There's separate tax brackets for people that file single. There's separate tax brackets for head of household filers. I've just put the married filing jointly brackets up here just as an example. All these principles and concepts work the same. So the way that it works is that for a married filing joint filer, the first $19,900 of income is taxed at 10%. And that applies to that first $19,900. Then when your income goes above $19,900, the amount of tax goes up a little bit. It goes up to 12. However, that 12% bracket only applies to income that's between $19,901 and $81,050. So it's not that when your income goes up to $20,000 that all of your income suddenly gets subject to 12% tax. That's a very common misperception. I have a lot of clients that will call and say, hey, how close are we to the bracket? You know, how much deductions or whatever will it take us to drop down a bracket? Well, in reality, it doesn't really matter, because let's say that you made $20,000 this year. So if you made $20,000 in a year, $19,900 would be taxed at 10%, and the additional $100 you make over that would be taxed at 12%. So it's not like you're going to save a ton of money by dropping down a bracket, because a lot of people think that, okay, you know, if I make $20,000, suddenly all of my income is taxed at 12%. That's not the case. The first $19,900 is at 10%, and then when you go above that, as long as you're below $81,050, then just that income that's above $19,900 is taxed at 12, and so on it goes down the line as well. There are some things to notice about tax brackets. Like when you go from basically $20,000 in income up to $81,000, or when you go above that $19,000, your bracket goes from 10% to 12%. So it's only a 2% difference. We say only, of course, you're paying more tax, but 2% more tax. You know, you make $100 if you're paying $2 more. So if you looked at this, that $20,000 that you make, the first $19,900 is taxed at 10%. That additional $100 is taxed at 12%. You're basically going to end up paying $2 of extra tax on that. Not a huge deal. However, if you look at the brackets as they currently stand, we're going from 12% to 22%. Well, now that's a 10% jump. That becomes a bit more significant. So when your income goes from $81,050 above that, so let's say that you're making $90,000 during the year. Well, now anything that's above the $81,050 is now taxed at 22%. So instead of paying 12% on that additional income, you're paying 2%. And then you've got a small increase here as we go from 22 to 24. Again, a 2% increase, so nothing too big. And then we do another jump all the way to 32, and then 35, and then 37. That's how the tax brackets currently stand and how they apply for the 2021 tax year. So as we're in 2021, that's how they apply to this year. As we file tax returns next year for 2021, these are the brackets that will apply. As we get into 2022, we'll probably have another set of brackets in there, but this is what we currently deal with. So that's just something to keep in mind, that we can see huge jumps that happen. Now, let me tell you where people get into a lot of problems and a lot of issues. And it happens most oftentimes to people that are married and they file a joint return, or for somebody who's single and have multiple returns. And people that are married and file joint returns and have multiple W-2s get in trouble a lot. And I say, so it's an issue with people married filing joint that both spouses work and get W-2s. It's a problem for people that are single and have multiple W-2s. And it's a really big problem for people that are married, filing joint, and each of them have multiple W-2s. Is what happens is, let's say that you are a married filing joint. So spouse 1 has a job and makes, let's say, $100,000. Spouse 2 has a job and makes $100,000 as well. Well, the brackets take a look at this and they say, okay, the employer for spouse 1 looks at it, and the way the withholding tables work is they think that that is the only spouse that's working. And so they start them out at 10% withholding, and then they move them up to 12% as their income goes up, and maybe they get into the 22% bracket since their income's over $100,000. You have deductions that go into this. These are based on taxable income, so you've got itemized deductions and standard deductions and other things that go into there. So even though your W-2 might say $100,000, if you have, say, a $20,000 or $25,000 standard deduction, then you're actually only being taxed on $80,000 or $75,000 of that income. But let's kind of ignore that. Let's assume that spouse number 1, their income is $100,000 and they're going to be taxed on $100,000. Well, that puts them in the 22% bracket, right? So, okay, so they're in the 22% bracket, and that's fine. But they've gone through all these levels. So they've had the first $20,000 was withheld at 10%. The next, up to $81,000 was held at 12%. And then they started to get a little bit into the 22% withholding bracket. So that's spouse 1. Spouse number 2 goes to their employer. Employer pays them. The withholding tables, again, assume that that is the only spouse that's working. And they start those withholding tables at 10% on the first $20,000, 12% between $20,000 and $81,000, and then maybe they start to get into the 22% bracket based on that $100,000 of income. So in this example, we're assuming spouse 1, spouse 2, they both make $100,000 of income. So combined, you've got 2 spouses making $200,000 of income, which puts them in the 24% tax bracket. So you start to see the problem that we have here. They are in the 24% tax bracket based on their income because they're at $200,000 basically of income. However, both employers have taken a look at the situation. They withheld 10% for the first $20,000 for each spouse. So now let's say each spouse only made $20,000 each. Well, the withholding tables will look at that and say, oh, you're making $20,000. Well, that's a 10% bracket, so we're going to withhold 10%. Spouse number 2 gets their job. The withholding table say, oh, you're making $20,000. Well, that's 10%. We'll withhold 10%. The problem is when you file a joint return, you take spouse number 1 income of $20,000 and spouse number 2 income of $20,000. You put those together, you now have $40,000 of income. $40,000 of income puts you in the 12% bracket on that second layer of income, right? So the first spouse was correctly withheld at 10%. And that's fine. However, that second spouse's income should have been withheld at 12% because now the first spouse basically used up the 10% bracket, and the second spouse then puts their income in the 12%, and that income should have been withheld at 12 instead of at 10. So now they're 2% under withheld. Maybe not a huge deal for 10%, for that 2%. However, you can see that if each spouse is making $100,000 or more, you start to run into a very significant issue because if your withholding was basically at 10 or 12%, but you're in the 22% bracket, that's a problem. So here's the situation. Spouse number 1 makes $100,000. Spouses number 1's income was withheld mostly at 10 and 12% and maybe a little bit at 22 because they just barely entered the 22% bracket. Now, spouse number 2 comes along with another $100,000 of income. The problem is the withholding tables say, okay, we're going to withhold at 10 and 12% for most of your income because that's where you're at, and maybe a little bit of 22. However, the problem that we have is that spouse 1 has already used up the 10 and 12% bracket, and their additional income is now subject to 22%. So when employer number 2 withholds 10 and 12%, they're withholding 10 to 12% too little because that income is now subject to 22% tax instead of 10 and 12%. So hopefully that kind of paints the picture of the issue there. And so when we have people that are married filing jointly, and both of them are making a similar amount, especially if they're both making 6 figures, we're going to run into a withholding problem because the withholding tables don't account for that we have multiple people working. There are ways to fix that. The IRS has a tool on their website. If you were to go to irs.gov and Google Withholding Calculator, there's a way that you can work through that and put in your withholding and things like that. The same issue applies for single taxpayers that have multiple jobs, especially if they have multiple six-figure jobs. So I had a client once that went and had multiple six-figure jobs during the year. By the time we got to file their tax return, I had no knowledge of that, what was going on. By the time that I got all the W-2s and we filed the tax return, that poor individual owed a lot of money because every time he started a job, they restarted his withholding back at 10% and 12%, those really low rates, even though some of his jobs were putting him in the 35 and 37% bracket. So, one of his jobs alone put him in the 37% bracket. And so when he restarted and started a second job, also making six figures, they were like, oh, hey, great, we'll restart the withholding again. And they started him at 10%. Well, if you're getting withheld at 10%, but your tax bracket's already 37%, you can imagine there's going to be a lot of tax due on that. So anyway, that's a primer of how those tax brackets work. When you move into a new bracket, not all of your income gets subject to that tax bracket. It's just the additional income that you make that's in that. And if you're not careful and watching out how many jobs and the withholding that's going on during the year, you can have an issue when you go to file your tax returns the next year. If you like this video, please hit the like and subscribe buttons below.